Good morning, class. Welcome to Homeroom with Unc and Market Monk.
Morning, P. How's your week?
Really good. It was a busy travel week for me. Pretty much MSTR was kind of the main focus for me, and this the 88 pivot. Kind of a kind of a new one. You don't really put a ton of stock into that, but I just had some confidence in it with the move it had down and being kind of oversold that any kind of crypto relief was really just going to send it. So yeah, did really well there. I saw some people kind of follow along with coin, same idea. So yeah, uh, really solid for me, just on a week where I wasn't in front of screens a lot.
Yeah, I think same situation for me. My son's home, so I wasn't at the screens too much. More selling last week than buying, but there's a couple things on the horizon like Lyft. Jack was good if we're talking short term last week, but mainly just letting some green candles go and starting to buy some of the newer swings or stuff that I see in the summer. So just not a lot of action, kind of a pre-planned action last week, I would say. But a good week overall for a short holiday week. I think we got a green candle on SPY. So um, consolidation better than pullback when you're overextended, as I like to say. Um, and we kind of got that last week overall. If I'm sector right now, a little bit in the real estate stuff again. Obviously a little bit in the silver and some metals, but it hits more of that DCA buying as the market figures out what we're gonna do in the summer.
Yeah, yeah, absolutely. The one of the things I wanted to get into a little bit, when you look at, I'll just use QQQ as the example because it's kind of the one I follow. But yeah, I mean, I guess even so being on the 4 hour, like you can even see Friday isn't really that big of a deal, right? I mean, people in short term options and things can feel, I'm sure it feels catastrophic, but yeah, so you just have a couple days of this, price action here. I guess the whole week that you sort of end the week right back where you started, and it was a short week of trading and all that. So I would imagine had Friday been open, you maybe go mid candle on that Friday move down, or something to that effect. But yeah, I mean, how do you? I guess just mechanically or the narrative story wise, like what is your read on the market for a week like that, and then the week before that being kind of similar too. We keep converging around this, definitely under 720, having trouble holding any momentum above that. It's the pop and fade look that we talk about. But I guess and you were talking about this a little bit last week, but you see this, and how does it affect what you do, or what do you see happening?
I think the main thing for me is some checks change, and I'll go over that in a second. But I'm gonna use SPY just so I don't sound like an idiot, because I
Sure.
don't really follow QQQ as
Yeah, yeah.
much, and I think QQQ is a little faster moving than SPY, just because of the things that are in it and where they are currently. So the moves should be a little more volatile over there. Um,
Yeah.
but I mean, you in general we established a zone, and I think 735 everybody knows by now, and the reason why 735 is it's 5% from a number a number that really was like a celebration. Spies at 700, yay! Everyone was fucking throwing a party when that happened. Um, and then 735, it's where we're consolidating, which is where I see the market at right now. So you get those micro moves, as I think you're calling them. You're 2% up in the morning and then it checks right back, or 2% down in the morning and it checks right back, and you kind of stay inside that zone all day. And First thing I do is just go look at volume, and if you look at SPY volume, my 30-day average, I mean, it's hitting it right to a T. So um, I don't think that's organic. They manipulate and control the market, and I think they're just looking for buyers, looking to hold this level, looking to sell stuff at this price. Um, and that's when you see that low volume consolidation up at a higher level. And what I do is, again, I don't try to figure that out or the mechanics behind it. What I try to figure out is what I need to do in that environment. And for me, it's changing the checks a little bit, or having, let's say, I always say have a couple checks on your stock, and let's just say you have three. Um, those three need to change depending on the conditions, and sometimes you need a fourth check or an extra check, as I like to say, or maybe that's five or six. But currently, I mean, I don't have a problem telling you what I look for, and I said it in this session a million times. You need to find things that are kind of moving to their own beat of their own drum right now. The charts will
Yes.
show you that they don't pull back on everything is red except for that chart, or that chart will
Right.
just, it will not go below $5. I have a lot more SMAs and auto RTLs than my actual lines right now. And in that environment, my levels are real, so I'm going to trade off of the market's levels a little more faster, so to speak. Take my percent, maybe keep a share. So those the checks and maybe the the overall outcome change a little bit. Reasonable expectations on my trades. The
Mhm.
thank you trades, as we say, the lunch money trades. That's why I stress all that stuff, because square pegs in a round hole sometimes will get you just murdered in this market, and we don't have those 50 to 20% moves. We have a lot of consolidation. We have a lot of pullback. So trading off of a little stricter system is most important for me.
Yes, and on the on the option side, like you definitely say thank you quickly. I mean that can evaporate much faster. I mean, even just if the price, depending on what you're in, if the price slows down, um, you start losing money on those. So if you find yourself up 200-300 bucks on a contract, um, it's not the time to hold for 600. Like you just got to go ahead and cut it loose, and then wait for it to set back up. But yeah, but not jumping right back in either. I don't think there are times when you're gonna roll instantly, um, which I guess it can be the version of keeping shares as a runner or whatever. But the runner better be running. I guess that's we've said that before, but
I think we used to stress it a little bit, and we don't, and we should. And I guess to critique you a little bit, it should probably come from your side and not mine. But um, you're gonna switch to. I mean, maybe if, I mean, throwing names out there because I don't trade options. But if we were trading like Nvidia and Coin and Tesla and I don't know, MSTR and all the name MU. I'm trying
yeah,
to find those names. Those runner names. If those are what you were trading options and you're doing real well the first 4 or 5 months of this year and the last 3 or 4 months of last year, you're gonna have to switch to some boring shit like Groupon and Iron and PG and stuff like that now,
and,
just because it's a little safer. And I'm not even an options trader, so I don't know why,
yeah,
but I know that's true because I've traded next to you for so long.
yeah. I mean, McDonald's,
Yeah.
you know, stuff like
Well,
that.
I would think you could have hit the airlines when I was buying them. I don't know how you wouldn't have done well on a 6 month option on the stock that moved fucking 25% like that. I just don't know. And and
Yeah,
this and the same with the casinos. Like this when we were buying all those, your long term option if you were a guy did really really well. And maybe that's part of it. That's the elephant in the room too, P, which you could touch on. But maybe in this environment, those weeklies probably ain't it. You need to be a few months out.
yes, no, I absolutely, and in general, I usually have calls. Calls get a little more
Time. Yeah, I've
time.
heard you say that.
Yeah, I will say that. I mean, to stay in the first ones that you were talking about, you have to have the short term put to go with it, and And that's why you can stay in that. I mean that the anything I'm doing with MSTR now was paid for by puts that followed most of a 40% drop, and some of it in big chunks. 10% days down. You're holding the put. All of a sudden it's $10 in the money, and intrinsic value alone that's $1,000. So you can just and then you take the loss on the calls and come out $400 to $600 up on the trade or whatever. It's more complicated to trade like that, but the yeah, healthcare comes to mind, restaurants come to mind. You've seen me talking things like Wing a little more. That Yeah, we're in that, and I pushed pretty heavy on staples, and a lot of those did really well. I mean, General Mills popped 7% on
Yeah,
earnings.
yeah.
It's a massive move for General Mills. I mean, typical earnings on them it's like two. But yeah, no, I think that I would also say that like pure option swings, um, that's not really where I would want to be either. I mean, even in something like PG could have just done you could have just done options and been fine. But I don't really like to do that. I mean, I think that to me to use the work, um, options you get the itchy fingers. You want to just sell them quickly, but that was really an entry that you can hang around in for a pretty long time. And Dow was the same way. Airlines have been the same way. So yeah, I mean it's in some ways this market reminds me of when we first started, the beginnings of when we first started.
Oh,
Now,
sure.
I'm not saying that we're going to enter some big bear market, but I look around. I was up on Macy's. I was up on airlines. I was up on banks. Healthcare. I was starting to get into that. Crypto was in the midst of a big pullback, and we're talking about keeping the lights on. The data center angle has changed that sector some, but there's a lot of parallels like that, and I think it is really crucial that people start to learn some sectors. I mean, I I mentioned a couple times to you that I'm sitting here begging people to ask me about toothpaste, and I'm getting questions about out of the money options on stocks under $10 that are AI stocks, and I'm like, you're not paying attention to anything, and you're trying to rescue some bags, or I don't know what the hell you're doing, but whatever it is you're doing, which is fine. Everyone comes in with what they got, but you also need to try to pick up what we're putting out there, and that sector awareness is such a huge key. What you do with that, which sectors you want to trade, or how you learn them, or whatever. I mean, that's kind of up to you, but you need to at least learn the vocabulary and that core curriculum that drives so much of what we're doing here.
Yeah, we ain't for everybody, and I'm fine with
Yeah,
that.
yeah,
I mean, it
right.
just is what it is. I mean, if we put this video out that's one thing I want to say about Twitter. We put a video out every week for free for the world. Don't really ask for
Yeah,
much back. Um, that's that. This is our 20 posts a day. This is what we do because we actually get something out of the 20 posted out of this instead of posting on Twitter 20 times fucking a day. Because I don't need $350 from Elon to go fucking full port and do an option and then show you guys my P&L. I just don't need to do that. I'd rather work with people in my community and fucking build a system and find some good information so I'm prepared going into next week. Just a little different. Um, and I think that is what drives a lot of those bad habits that you're talking about in human form. But I always see it as that, Pete. Like you put someone through a course and they come at you and they're all fucked up. Well, it's not their fault. It's the course they went through, and that crash course of Twitter just creates bad habits out there. I mean, a ton of them. And
yeah,
if you're out there this week looking at them, they're just like finally breaking down in some epiphany post of the shit we just preach. Oh, it'd probably be just easier to be a swing trader. Oh, well,
Yeah, yeah, yeah.
oh, if you just take profit and not let it go negative, you'll be okay. No shit. What the fuck have you been doing the whole time besides learning bad habits? I mean, and it's not even a bad market. It's just a consolidation market, which is where this conversation started.
Yeah.
And not getting it or larger time frames, and you'll see the real moves. Like all this bullshit. And we try to stay ahead of that, so it's built a little different, and it's it's not necessarily say repeatable, but it's adaptable to your fucking psychology and how much time you have, which is really what's most important, and no one will tell you. And to get back to the point of the conversation we were having, um, some markets aren't um, some markets aren't very favorable if you don't have ample amount of time and or your style. You can just get shut off. And I think we currently are there. I mean, if you just look at SPY, if we go on the big boy of SPY, we're God, what, 1, 2, 3, 4, 5, 6, 7. We're 2 months into this zone, P, and um, it's pretty violent down as opposed to up. So you start to think you're in a bear market, and I think that's where your comment comes in. We're in that same environment. 100%. I do think we're in that environment. We've been in that environment before. Is it a little more magnifying because of how high things are currently? And yes, um,
Yeah.
but the bubble, or so to speak, or whatever, is going to be the AI bubble, and it I think we just know how to separate winners from losers and pay attention to do enough stuff on the other in the rest of the world, the other sectors, so to speak, that it's not going to be a problem when it happens. It's going to, we're going to look at it like we always do, as thank you for this entries, or thank you for these entries.
Yes, and I think that one thing that I think to understand about a stock like Micron, for example, which you know we we talked about it this one in a different era, it's entry and whatever, but it's not gonna fall from 1,000 to 600. It's gonna fall from 100 to 60. You know what I
Yes.
mean? Like
Yeah.
it's gonna split and
CrowdStrike.
then reset back up, and then the some of the older levels the pre-split levels that we have all of a sudden come back into play. I've been at this long enough to see that, and
50
it's
bucks. Write
happened
it
with
down.
Nvidia,
50,
and
50 bucks.
yeah, exactly. And so it's happened with Nvidia, and it's happened with Tesla, and happened with MSTR. And, it's just like we kind of see that. So when the hype finally dies down on the stock price and all that, we'll be able to revisit these, and the split is a big catalyst to having that happen. And the split itself initially is, sends it much higher, and then kind of comes down from there. It's like S&P inclusion or anything like that. I think that one of the messages that I would say, I mean, especially in this administration or regimes, the term that flies around the English department break room. But anyway, the way that the national security priorities, and
Sure.
that you don't really want to short those, and then they can keep the bubble. I guess what I would say is they add complexity to the bubble, that you don't get some smooth easy pop that's easy to short, that the money starts to spread around, and things deflate a bit, and drawdowns happen, and all of that. But you just kind of look for opportunities, and that was where I was at with the Mag 7 conversation.
Yeah.
And I did actually really well on those, just kind of near term investment account, all of it, even Tesla. And that you actually, you kind of copied one of my notes. I'm like, oh, Tesla's going vertical. that it's having days like that
Sure.
again, and that that's certainly all there. But looking forward, the uh, you know, post Trump's going to be different. I don't care if Republicans or Democrats are in power or whatever, but there's a lot of, I guess, mechanics of the market and the government's relationship to stocks that I think it would be naive to think that that'll just end with Trump. I think it'll be presented differently, but that that stuff's going to be around, and I would look through some of the political grandstanding that you'll see as we enter the last 2 years of Trump. Um, that there's a lot of things about the way the market works that are going to still be around, and that's just kind of my broader take on the setup here.
I think when we talked about that last time, I said it's. I mean, they bitch about everything, like the fucking cleaning out a reflection pool. Like
Yeah,
they bitch about everything.
yeah,
And they don't care. But the stock owning company thing, quietness.
yes,
Quietness. They don't say a
right.
peep about that shit, and I think you've nailed that to the wall right there, just perfectly. That when it's their turn, they liked having that be the new environment. Which is gonna, it's gonna. I mean, we're seeing that one side of the coin, and I mean, we even in our when we started trading, it's like we used to kind of have, hey, Republicans, oil, hey, Democrats,
Yeah,
weed, and Democrats are even
yeah, right, right.
Democrats are even the space stocks, to be honest with you. But that didn't work out that way. That worked out the other way. Um,
Yeah,
I digress from that. But yeah, I think that's going to be something that people are already sleeping on, even though um, we kind of lucked out with Intel. Um, the only
yeah,
time you could see me saying full port in a goddamn stock. Um, yeah, but in general, that's again, it comes. I always try to look at it as separating winners from losers. Um, when we're looking at anything like that, and some of them are big winners and some of them are big losers, and um, we know the names when it comes to a lot of that stuff, and you're good at following, tech, so to speak. I mean, we were on drones and quantum computing almost 2 years ago,
yeah.
and didn't know why at all. Just didn't know why at all. And now a country like Ukraine, they have drone nets up because it's that prevalent over there. So yeah, I'm not worried about any of that stuff. P, you just kind of take it as it comes, right? Like that girl that just rode to Hawaii from California. There'll be some good waves and some bad waves. You'll get there. Try to be early.
Yeah. Yeah.
Um,
Yeah,
I
and
Go ahead.
I think too the I mean part of the character of our room that it's a lot of guys with day jobs, so myself included, and as part of those day jobs you get, you know, investment accounts and 401ks and 403bs and stuff like that. And if you've been in that the whole time we've been doing this room, you're doing pretty damn well in that stuff. And so it takes a lot of pressure off trading as opposed to basically there's a lot of guys who it's mostly men but some women too, but they kind of look they're young and they confront this environment that we're in economically and say like I got to take a lot of risks.
Yeah.
I'm gonna make it. I'm gonna escape the underclass, and for them, the the market showing the kind of signals it's showing right now is pretty scary, and it gets them to jump to discover puts and start wanting to short everything, and then the you pair that with the people they follow who sell narratives and all of a sudden are switching to spy and all that because a lot of the small cap pumps aren't working and whatever that I just think it's a lot more chaotic if you don't have that stability elsewhere that you could just look at the market and be like, well, I'm not going to trade today. And we had a few people say like, well, I'm pretty much all cash right now. I don't think this market's great for my style. I'm just going to wait it out. And that's that's kind of a big boy decision. I think that's good. I mean, that's that's perfectly fine, and it's much better than hell the thing I used to say. I'm gonna trade every day. I don't think you have to do that. So there's that too.
Yeah, that all cash thing's starting to bother me when might be because I got a little more money nowadays. But
Yeah.
I mean, if we all go into the moon, I want my cash to be valued as it is today, right? By the level of wealth I am now. And if we go to zero, I still want to be held at this level of wealth. So
Yeah.
it's one thing about hard assets is that no matter you're still kind of held at a level, no matter the price evaluation of it. Um, so I do wrestle with that all cash. Um,
Yeah.
that's
Well, I
usually
know. I think it's kind of relative. I mean, it's in my my trading account, like,
sure.
and versus like, I mean, I think everybody has investments and
Oh, just
um,
having like the
um,
50 all cash. I get you. I get you.
yeah, yeah,
I don't know. Last time I've been all cash over there. I mean, I've yeah, yeah. Um, Yeah, no, and the origin of that conversation, you definitely got me sidetracked a little bit there with that statement. But the origin of that conversation, my son's in town, and we went to one of the games, and then we watched the other game in town, and his wife went to go get some makeup, and we started talking about I was like, bro, Becky Basket. And he's like, what the fuck you talking about, Dad? And we went over that whole conversation, but in that conversation, his feedback. I mean, I ain't gotta tell y'all about the Becky Basket. If you don't know about the Becky Basket, like and subscribe. There's a link somewhere, people, because y'all should know about the Becky Basket. But he said the problem out there. Um, well, I brought up lemonade. Like y'all don't know about fucking lemonade. No, I don't know about lemonade. He's noticing the gambling though. The predictive stuff
yeah,
it's an issue. Like the kid, our clientele P that we're out here striving for, they're trying to gamble. They're not trying to invest. The stock market's a scam. At least I get
yeah.
to like watch the play out, so to speak. Um, I don't gotta. I don't have to watch level two. I can watch the Mets game. Um, is a problem. He said a huge problem for the next generation.
Yeah, it is. And I it used to be like you sit in a bar when sports are on, and it's like you get a sense of teams people are going for. And the motivation for that is they're like, this is either, this is their team, or they have money on the team. And then, fantasy football's been around a long time. It used to be, and the way I still do it is just like you're in a little league with your friends and it's for
Yeah,
fun, and maybe there's, y'all put $100 in, whatever.
250.
Um, yeah, yeah. But
Sorry.
yeah, yeah, yeah. But now it's like, it's like I need the backup tight end to get more than 11.5 yards in this game for this parlay to have a chance. Like, and that's how they talk about it. And I teach too, and half that room, that's what they're talking about on Monday. Whatever happened on their Sunday parlays and all that, and it's just everywhere.
Yeah,
And
yeah.
I posted the other day, I'm like, this is a stock signal for you. Americans are losing the most they've ever lost in gambling. And the way gambling works, when you lose the most you ever lost, you don't stop. You got to make it back. So it's just gonna keep growing, and we just figure out another example of figuring out
And
winners and
losers.
losers. The That Texas Tech quarterback story I followed. I mean, that's just the tip of the iceberg. That's just the
Sure.
guy who got caught. So that's gonna be around, and Vegas as the sports capital of America. That's as they get an NBA team and baseball finally gets there. I mean, that's gonna be there too. So yeah, it's gonna be one of my favorite things to trade. It's just around that whole idea.
Yeah, we were degens, P. I'm telling you, we were degens, but it was like 2000, so 250 was a lot. And
Yeah,
the only
yeah,
reason we did that is so we could pay out $50 a week. That's they really wanted it to be like get to
oh, I
the
see.
highest
Yeah,
scoring
gotcha.
team. Yeah,
Yeah, yeah,
so they wanted it to pay out. I want to read this note and then we can move on to boring stuff, but I got to
yeah,
get it in here, especially since we kind of talked about um, you were talking earlier about um, the Mag 7, and I was like, thank you, Pete, because yeah, I've been buying Microsoft the 360, 370 area. Uh-oh, we just lost that. Come back. Um, but our room is good at separating the. What are we doing? Separating the those names, those real investable names, and just the complete and utter dog shit. um, at least that's what I call it, because all stocks are shit. But Fastly, man, talk about a stock that sub 10 we had. It got this power move to some random level, 1727. Flow's going to 25. I think it went to 25, maybe a little more. Now it's reconsolidating on this 1725 again. And I know we normally don't talk about individual stocks or give up levels in here. But
Yeah.
this is what it's fucking about, man. It's about, and I'm sure we'll read this soon, or it'll come up naturally in your scans or screens. But it's being
Mhm.
able to trade dog shit and being able to hang out for the good plays that really make our room, in my opinion.
Yes, yeah, no, it is, and that ability to return to previous winners, and wait out a drop like that, and not see it at 34 and start thinking 50, you know, right away. But yeah, to follow these moves, and I did, I think I'm not sure if I posted or not. I may have, but the there've been some of these pullbacks where, like, I still did have flow there. Like, it pops to 28, goes to 26, and I'm like, yeah, it's active, but I'm not that interested in doing that, given where we came from. But um, now that it's basically back in the middle of that last move, and we have a level here, that it all of a sudden becomes very readable again, and it is likely we return to it when it does stuff like this. And one that is kind of that's going through its life cycle very quickly is Poet is like that, and I'll go ahead and throw that one out there for people. But it yes, so there's a lot of those that you want to find some range that you can read, that you can really see our system working on some stocks like this.
Yeah, I pulled up the group 91823. That's 1727 10-year volume profile. That's where we got the level from.
Yeah.
2023. So I mean, this is a 3-year-old chart line on the chart. 1, 2, 3. You kind of see it. There you can see the volume P level. And P, what the fuck? Where's your list at so I can get up some shit off your list?
Yeah.
No, just play. You want to get to some boring stuff?
Yeah, we can do that. All right, so yeah, I go with copper first. Something bigger. So 4 hours is a pretty long-term chart for me, but I do use it. Yeah, the day chart on copper. Yeah, there just isn't much else. We're still under $7. We're still kind of on our way there. We're also to a point where a dramatic pullback would be some move under 6, 5.8 or thereabouts. That could happen, but I think that the kind of the structure of the move, or the sentiment on the sector, or the importance of the sector, like, all that stuff is still favorable, and all of it still kind of points to steel for me. So I'll just keep repeating this every week until that changes, and that's kind of where we're at.
I'm not gonna say much except for I'm gonna buy steel every week until you stop saying that.
Yeah, right. And then gold and silver. You had wanted to talk about these, so we could spend a little time
Okay. Yeah, I
on
don't want to
that.
get too deep into that, Pete. But I mean, just you've talked about, um, it's still kind of being active in the flow side of things and charts, and they're just starting to consolidate on the SMAs, which that's the big money level, and you see the support forming off those levels. Then we have previous highs, and even mid candle from a lot of those charts are going to be really good. So I think it's time to start really picking some prices out on those, and maybe just making a watch list of the ones you like, um, because they're going to move in a kind of a liquid range, and
Yeah.
any kind of news, a little bit of a beach ball effect on those charts, just because they have that support of the 50 and the 200, which is old gray money in my opinion. So I'm talking like everything, all of them, because I mean I don't want to give up no names here, but anything we covered that's gold and silver, it's just there right now, and the price points are good because you can get stuff that's well, it's not $3 or $4 anymore, but you can get stuff that's like $8 or $200, um,
Yeah.
and it's very tradable and probably tradable from both sides pretty efficiently. Um, and then my thesis added to that they still physically make it or produce it out of the ground, and they're going to get these prices, which is still 100% over last year.
Uh, yeah, absolutely. And you just, with many things, you're gonna have 100% move. It usually is gonna be from a spot that makes sense, and it's kind of the easiest way, for that to happen is to get a pretty significant drawdown, a reset, and then it kind of it goes from there. But yeah, so I'm pretty much with you. I think as with as with a lot of things, that if I were to say, like, well, what's the ideal spot to get back into silver? It's probably 50 and not 60.
Sure.
But that's how they operate. That it's the move can often happen higher than you planned on, and then all of a sudden it leaves you behind. So I always have kind of a two-tiered approach to. It's like, here's where I'm going to kind of nibble and get back into this stuff, or I'm going way into it. And the crypto things were like that. I was trading coin in the lower 200s. I didn't really like trading it as much there, but the moves were there, the relief was there, etc. But once like it gets down to like 150, I'm like, okay, now we're talking, because now 300 is 100% from where we were, and 300 is a number that doesn't seem that crazy for that stock. So that lines up, and then I'm not even trading it with that in mind necessarily, but it's part of the big picture on it. It's why the moves from 150 to 180 are so good, because there is that potential out there for longer term for this to see all time highs again. And with silver, the 120 number is a little crazy. 100 or low 90s is not. So yeah, you have that range there, and you have what you talked about, that benefit of um, there's still plenty of miners who are benefiting from, they didn't get involved with silver yesterday. I mean, so they,
Yeah.
for a long time, were operating with this stuff under $40, and so this is still a great spot for them from that perspective.
Yeah, and I lost that a little bit. Just to throw an example for you, what I'm talking about on my end, and it is more of a use the work trade, and you should know which one of these companies are like, we might open this mine if they get the lawsuit off of us, or that, hey, we're buying other companies and we're producing shit. You should know those by now. That's part of use the work for me in this
Yeah.
situation. And I'll just bring one to you. I mean, everyone plug theirs. This is for Professor. But AGP, it's pretty simple on AG. Below 20 right now on the 50 on the weekly. It's not going to go to 35.40 again. That's not what we're playing. But back to 22s to 25, totally happening. And that's the trade I'm talking. More of the trade I'm talking about.
Yeah.
For people in our room. All right, unplug your ears, people.
Yeah. All right, and
And sorry, and there's 10 of those. There's 10 or 15 of those. 100. I mean,
yes,
easily.
yeah, absolutely. All right, I'll go to oil, natural gas. Oil obviously, kind of had this big
Where
drawdown, but there's
where's your floor? Been waiting to ask you that all week.
oh, I mean, I kind of think we're below my floor, and I think it's
Okay.
all fake.
Okay.
But I Yeah, I mean, I don't.
No 58?
No,
No
it
58
doesn't.
for you? No?
It doesn't. Maybe, but it doesn't matter.
Okay. All right.
So I think there's a lot of practical realities to oil that are going to put this back up to $80 or so, and when and how that comes about, I don't know. But I mean, that's kind of what the flow says.
Is any of the cards on your table filling up our strategic oil reserve? Is that like a card on the table or not
Yes,
really?
that's no. I think that's a pretty big one. Yeah.
Because that would be my a big reason for being down there is for that.
Yeah.
I mean,
Oh, right. To get the price
yeah,
right to fill it up. Yeah.
yeah.
Yeah, I'm with you.
Well, I could see that being a story. We won the war, best war ever, cleanest war ever, huge. Now we're
Yeah.
buying oil at $58. We actually get it at 56 because I made a good deal. I could just see that we're filling up. We're gonna have the hugest reserve in history. I could just see that being the narrative and story of it in 8 to 10 months.
Yeah, and I'm sure it's maddening for people trading oil futures on hyperliquid that rationally speaking, this makes no sense to be down here. And then the markets stop responding to straight, almost completely. But a lot of the logistics and practical realities of what that war did are going to be around for you know 18
Dec-
months, 2 years or something. So or more.
yeah, I'll
But
say decade. I was calling decades, B.
yeah, right. Um, but yeah, it's yeah, the market can kind of fake this for a long time, and
Oh,
so
sure,
there's
sure.
a lot of paper oil out there. But
So
you know,
what do you
a bit
how do you take the pullbacks in the charts then? As
in the actual the oil charts.
yeah, yeah.
Well, I all I look for is the longer term setup still there. I mean, a lot of it's just kind of short term noise, and I think you plan to accumulate, over time. And I will just like throw this one out there. So we're in the middle of the zone. I mean, that's basically like whatever else is going on in the world. We're in the middle of the biggest oxy zone I have, and that is a spot to start accumulating. Have a willingness to buy down to that line below, and I buy more the closer it gets to the line, and then I just wait it out. And I've done that several times. So yeah, that's where I am. I just look for the best one, the biggest ones that have the best levels. Is the main thing I'm looking for, and then the kind of niche stuff, the oil gas combos, the offshore rigs, midstream. I try to figure out where the sector's going, and what I read on the subsectors is like typically kind of what's going to matter weeks or months from now, and the tankers just did that. So that's how I'm reading the sector, looking for to accumulate, scale into the big boys, and then find the the hottest part of the sector and
Perfect.
post that.
Perfect.
Natural gas, we're in good shape here. This they're not. If all their attention's on manipulating oil, it comes off of natural gas a bit. So we're getting close to the end of some of the suppression here, and I think you're going to see this at you know $5, and then we go from there.
It's just quiet in the news. It's real hot there
Yeah,
for a while,
yeah.
but it's just quiet in the news.
Yep. All right. So then, lithium, still kind of same thing here. They they'll eat up these pullbacks. So I think you still look to buy some. I've noticed some people in our room buying some. We know the names, and still I think good shape here.
Yes, I like it.
Uranium, 85 is turning out to be a kind of significant spot where it's sort of gathering for the next move. that last move to 100 was a little too fast. So I think you're going to get kind of a grind, at least to the low 90s. But um, there's a lot of news out there to move the uranium names. The big split within the sector that we talk about. Um, are you pulling shit out of the ground, or are you sort of daydreaming about little modular reactors? Do you actually build any? I think we do want to get to a point. It's kind of like quantum, where do you have a quantum computer?
Yeah.
Or are you just like a consultant about quantum issues? And that figuring out that like who's actually doing shit is going to matter for uranium stocks to me, for the the nuclear ones in particular.
I agree with that.
All right, and then real quick check in on China. A pretty decent pullback. I'll go to yours. I like this one better.
Appreciate you.
Yep. Yeah, and actually you can see it more clearly on this one.
That's why I like it
This
better.
is where
Sorry.
this is where you buy. I think. I mean it's reacted pretty well here.
Below
and I don't-
26.
Are you gonna get? Yeah, and are you? Is it just gonna go to 30, or are we gonna consolidate at 30 and pop to 40? And I'll just kind of see what the flow says. But yeah, this is the spot where you want this stuff. Either just this or the stocks that are in it. So yeah.
Yeah, this sector's just. I think it's a winner when the war's over. Even if maybe not a 1 day winner, but grinding out, and we'll talk about a little bit more about China in my notes, because there's a few to get started early on, just because of the angles they can take and the readjustment of the economy after the war. Um, yeah, if anyone's pissed off in America, run into China. That's what I'll say freely to everybody. If anyone's ever pissed off at America, doing business with China is the easiest thing to do to us negatively, because it don't cost you anything. It's not like a war or sanction or anything like that. Just doing business with China is always bad for us, and depending on what kind of product it is even worse, or can make it worse.
Yep. All right, and good old. Well, actually, 10-year first, and then I'm wanting to get to Bitcoin, but here it is, 4.5, 4.485, and then we'll see actually what it did over the weekend, or what futures open, whatever. But this is the pivot, the spot. Any surge over this, they're going to intervene. If it starts to fall and you can get to that 4.2 or break down to 4, you'll get a more sustained move up in some stocks, and you'll see Tesla at $450 or something. But yeah, this is just the spot where you want to keep an eye on it. I don't really have a read on this. I just say it's a decision point. It turns on some algos, or gets the insiders moving. Administration cares a lot about bonds. You could add all the complexity you want. You can follow them all if you want to, but this is just the one to me that's the cleanest look.
Yeah, I didn't look at it last week for the first time, probably 20 weeks.
Yeah. And my crypto page.
Didn't look at that either. Where's that at?
It's been it was actually a pretty good weekend so far for crypto. Hanging in there. 15-minute here. Yeah, so the 62 area, all right. Big picture, we're still kind of down here. I don't know on your end like what it has to get to give some confidence for a big move up, but I just think relief alone could carry this to start thinking about 65 to 70. But yeah, I don't know. I wouldn't really call it wouldn't really call it healthy, and I don't know that I don't know if there's news out there to save it right now or anything like that either. But
Nah, I think we're gonna bleed
very
more.
tradable. Very
Yeah, tradable range, but we're gonna bleed more. I don't
Yeah.
see a I don't see a reason not to. I really think we're getting into the 50s, P. I mean, like low 50s.
Yeah.
And the volume kind of is what you need to see over there, and just hasn't really been there. Just a lot of selling this year, and I don't see people needing a reason to buy. So
Yeah, and MSTR is a big part of the unwind too, as they have been, in the past. But yeah, the range is just hard to ignore. That even with the elevated IV, that those stocks have been good, so they'll still be in my notes quite a bit.
perfect.
And we'll go to SPY real quick.
Let's do some SPY action. Just hanging out. I mean, at this point in time, you can call it a 735 build, especially on the shorter times with the that 750 kind of being the top.
Yeah, the only contract of note for me is December 660. It's a 50-50.
Yeah, I mean, just to kind of we can consolidate, which I'm probably heavily leaning there for a little while. I don't see no reason to do the other two options, and we're either going to check back to support or break through to new price discovery, and I just think that check back to support is inevitable. And 700 being it, probably don't get there in a bull market, right? So 710 or whatever, I don't know, something down there, but that's inevitable, and people are going to think the sky's falling when it happens. As opposed to we're running to 780, I just don't see that happening right now, and I would just be prepared for that. 685 is the 3-year, to where the 50s SMA is at on the weekly. You get the 200 on the daily, kind of at that 709 I talk about. So just zoom out on if it gets red. Kind of not necessarily needed, but healthy. And I mean, you've hung out with me long enough. I say that from time to time, and it usually works out okay for us because we're prepared. So
Yeah.
If they're still not set up, it sounds like on your end. I mean, 660's just been the number for fucking almost a year now.
Yeah, it has no complement, so it'll reach a point where they'll roll out of this to March or something, and so we're just kind of waiting it out.
The 700 pullback doesn't save that at all. No.
No, yeah, I mean but they'll still roll it. I mean, so it saves it, but just for it to have more value when they roll it.
Okay.
And they don't really care because they're just making money elsewhere. But yeah, they're not clearly hedged for some big drawdown at this point.
I do see that though, just in the chart in general, P, that it is the fucking it's elevator down, stairs up, even in this consolidation.
Yeah, absolutely.
It's real quick down and grinds up, real quick down and grinds up. So, it's fine for me. We've been finding some good shit. So, I mean,
yeah.
I'm not a SPY trader. So, there's always a bull market somewhere, so to speak, and you do a good job finding that, and I do a good job staying on it. So,
yeah.
You ready?
Yeah, no, there's plenty that you bring him back up, and I'm like, oh yeah, that one. And so I'll go look at it. But yeah.
All right, I know my job over here.
Yeah.
You ready to get to work, P?
Yeah. I'll just grab a quick coffee refill and get to it.
Perfect. Like and subscribe. Link somewhere, people.